This is a review of the second sub-fund of the MANSA X Special Fund, that is the MANSA X USD Special Fund. Welcome for today's review. My name is O'Brien. To begin with, we'll need to draw a very close comparison between our available USD money market funds outcomes or returns and the returns that we are getting from the MANSA X special funds. And with this schedule, we have picked the two top US dollar money market funds, and that is the Kuza money market fund and the Etika money market fund. And with that, we want to look at the returns in the current year and the average annualized returns from the time of inception. And from the schedule at the top, the gray segment, the net rate, Kuza gave us a 5.89 and Etika gave us a 5.63, and that is the annualized rate of return that these two USD money market funds realized at the end of the year. The next column, we have the net return since inception. And we have a 5.64 for Kuza and 6.38% for Etika. That one gives us the average from inception of these two investment funds. And these are non-discretionary funds. The second part, highlighted in light green, we are looking at the spread or asset allocations for these two USD money market funds, and Kuza has spread the entire asset under management into three asset classes. Eurobonds have invested 66%, corporate debt consumed 12%, and 22% went to cash and bank deposits. While looking at the asset allocation for Etika, cash and bank deposits took a whopping 37%, while the remainder of 63% was held in fixed deposits. Conclusively, you can tell that the fund manager for these two USD money market funds have a very narrow space of not more than 6 asset classes within which they are supposed to assemble a portfolio that should be yielding good returns to their investors. And very bottom, we have what the MANSA X USD special fund has been able to deliver over the period. And looking at the compiled schedule, then MANSA X has been able to deliver an average of over 11.5% from its inception. And because we have been talking about inception for the three compared funds, Etika USD money market fund was incepted in 2023. Kuza's began in 2024, and MANSA X USD special fund inception was towards the tail end of 2022. So we have picked the top two USD MMFs that was started at the same time when MANSA X USD special fund also was started. And there it's a fair comparison. Looking at this second schedule, we are getting a summary of the annual returns for MANSA X USD special fund for the 3 years it has been in operation. That is the year 2022, 2023, and 2024. And from that pie chart, which for each year gives us the gross return and the net return, you comparatively tell that the only difference between the gross return and the net return is the financial services fee, the management fee, which is 5% of the gross return. And that is very important to compare with the tax element that features in the USD money market funds of a withholding rate of 15%. And as we had looked earlier, when we considered the review of the MANSA X Kenya Shillings Special Fund, which I would request, if you have not watched this video, then you need to go back to our channel, search for MANSA X Kenya Shilling Fund, and have a review of the first part of that video, because you get a lot of relevant information that will help you to decide or to make your decision on the way forward. If you take an average of the return by MANSA X USD for those 3 years, you are getting a figure in the neighborhood of 11.5%, and that is an average of 12% average return from this fund for the 3 years it has been in operation. And considering that and comparing with this former schedule on the returns that we are getting from these two top USD funds of 5.64 and 6.38, then you can considerably tell that the MANSA X USD Special Fund has delivered averagely 200% return compared to the returns that we are getting from other USD based investments. That's comparative data on the performance of the locally available US dollar based money market funds and fixed income funds, their returns, and comparing with the returns that have averagely been annualized from the MANSA X USD special fund, and also the institution of the fund manager. We have to look at the objective. What's the purpose? This fund manager created this product, the MANSA X product, with its sub fund, with the sole objective of generating above market average returns, with the sole purpose of accelerating the growth of client capital by the way of diversification and mitigation of risks. We'll be looking at that extent of diversification, which is very important because that is the modality that this fund manager bases, or it's a foundation on which these investments are able to give us these returns with a minimized risk. Investing in highly leveraged platforms or products and also foreign exchange trading are high risk investment ventures, and being part of the products that these fund manager invests the assets under management in these funds, it's very important to look at that aspect because it is the extent of diversification and the mitigation measures and the trading models that deliver, at the end of the day, a moderate risk in the entire investment. Now we look at the next important question, and that is the question of risk categorization of this fund that is giving us the 200% vis-a-vis the compared funds and other funds, to look at or to have a feel of its risk exposure. The categorization for MANSA X USD Special Fund. And as per this schedule, also cropped from the fund fact sheet, then the MANSA X USD Fund has been categorized number 2. Comparing all those categorizations, we can comfortably say that this fund is categorized as conservative, if we don't want to call it a moderate risk fund. And then the question of risk categorization now taken care of, the third question that is very important that we look at is the question of the fund manager. And this product, the MANSA X USD Special Fund, is a sub-fund of MANSA X Special Fund, which is a product registered and regulated by Capital Markets Authority since 2024 from Standard Investment Bank. Standard Investment Bank was formed in the year 1995 by its founder, who also doubles as the general manager, this gentleman, Mr. Efe James Wagunyu. Mr. Wagunyu, as we had looked earlier in the previous MANSA X video, this gentleman has a wealth of experience spanning over 30 years. In the board, we have other equally able gentlemen, starting with Mr. FFA Job Kihumba, who was formerly a CEO of the Nairobi Stock Exchange. We also have two sons of Mr. Eve James Wagunyu. This gentleman, Mr. Donald Wagunyu, who is the executive director and CEO of Forefront. Forefront is very important. It is a very important organization in the segments of forex trading. He is the original author and creator of algorithm-based trading platform. And looking at the portfolio of Donald Wagunyu, he is also a board member of the Nairobi Stock Exchange and is the chairman of the Association of Kenya Stockbrokers and Investment Banks. He is a board member of the Nairobi Stock Exchange and a chairman of a board committee. And we shall be looking at the fund-specific details, the asset allocations, and the modality of diversification of these funds after 3 seconds short break. So don't go away. In the meantime, give us a like to this video and engage us in the comment section. And if it has value, don't forget to share it with another person. See you after 3 seconds short break. Welcome back, and the first schedule to consider is the MANSA X USD special fund profile by looking at the schedule. The fund name is MANSA X, and the type is a special fund of a collective investment scheme and non-discretionary in nature. The base currency for this fund is US dollar. And like we have said before, a base currency is the currency upon which the fund manager distributes the incomes or returns that he has generated from various investments from the assets under management and probably in diverse currencies. The fund manager in this case is a Standard Investment Bank. This fund was started in October 2022. Custodians is the I&M Bank. Trustees is Kingsland Court Trustees. Auditors are Charterfy LLP. And the regulator is the Capital Markets Authority. That is the fund investment ecosystem. The assets under management in this fund as at the end of the current year is 47.3 million US dollars. The fund requires 0% initial investment fees and 0% redemption fees, meaning that at the point of creating your account with this fund, and also at the point you want to liquidate or withdraw a part or all of your investment from the fund, you will be charged 0%, or otherwise there is no charges for those two functions. The management fee or financial services fee under this fund is a 5% with a target return of 15%. These funds, unlike the other ordinary funds, the money market funds, the fixed income funds, the bond funds, balance funds, do not have a benchmark rate. The fund does not respond to a specific instrument. The fund relies on a target rate or a hurdle rate that is set by the fund manager, and therefore, and as required under the law and the regulation, the fund manager does not guarantee anything, including the returns. So the 15% return is not a guarantee. It's a target that the fund manager sets for himself to assemble a portfolio and assemble machinery and individuals whose efforts intend to yield above market average return. And this case is the 15%. Once the fund manager realizes a return that is above the target return of 15%, then the fund manager shares in that extra return. He rewards himself for that extraordinary performance by taking a share of 10% of the extra return and distributing the remaining 90% to the investors. And that 10% reward to the fund manager for excess performance is the performance charge of 10% of the excess or the extra return above the target return of 15%. From the year of inception, this fund has been able to give a return on average of 12%. And comparing with the average returns from the USD based funds that we compared earlier, we noted that this 12% return is a whopping 200% of the other US dollar based funds that we compared. And for that reason, if you look at the risk exposure, the categorization that we noted at 2, categorized as 2, and the possibility, because this fund has been tested by time. However, as a disclaimer, past performance, past and current performance do not guarantee future performance. But on the basis, because analysis and the strength for decisions are based on historical data. Based on the data so far analyzed from the inception of this fund is able to generate extraordinary returns that can compensate such risks. The locking period is 6 months, and this period is very important for such a fund because it gives the fund manager ample time to create a portfolio that balances between the risks, returns, and the liquidation of the fund. The risk level here is moderate, as we have noted, is categorized as 2, and the minimum investment is $2,500 US dollars with minimum top-ups set at $1,000. And the benchmark rate here is on the hurdle rate of 15%. In the next schedules, we are looking at the extent of diversification because that is the basis, the foundation of this investment to ensure that the risk exposure per asset class is maintained at the lowest point. And before then, in this schedule, we are looking at the extent or the markets that the fund manager seeks to invest. And noting that this is a global fund, much of focus is laid on the global markets. But the fund manager has also the local markets at its disposal for purposes of investment. And that said, from this schedule, it's clear that the fund manager has both the local market and the global market. And in the local market, the fund manager is investing in cash and cash equivalents, fixed income securities, the NSE derivatives, exchange traded funds, and NSE equities. On the global segment or global market, the fund manager is targeting single stocks, stock indices, fixed income, derivatives, precious metals, currencies, and commodities. One way that displays the extent of diversification by the fund manager is by looking at the top 10 asset classes to which this fund has been invested. The fund manager has a wide array of asset classes totaling to over 200 classes, and looking at the top 10 asset classes that have been invested into, and as per this schedule, you will notice that the top 10 asset classes that the fund manager has invested, they only took 40% of the total fund value of 47.3 billion. And therefore, the details as per this schedule, the fund manager invested in fixed income instruments to a tune of 12.57%, interest rate derivatives took 6%, NASDAQ 100 took 4.2%, Canadian dollar taking 3.11%, all the way to the bottom, cash and cash equivalents taking 2.38%, and Morgan Stanley taking 2.33%. And averagely, That top 10 list gives us a total of 40.65% of the entire fund. And taking an average investment in each of those will realize about 4%. And that means that, or concludes that, the extent of exposure per asset class is a paltry 4%. And that shows the extent of minimization of risk as per asset class distribution. And considering the rest of the invested asset classes that stems to more than 100, if you take an average, the exposure goes as low as 32%. That will also be implicated, or that will also be amplified when we look at the geographical extent of diversification of investments by looking at this schedule. And as per the schedule, 54% of the total assets under management have been invested in the American market. We have 30% being invested in African markets. We have Europe taking 13% of the total investments, while Oceania is taking 2%, and Middle East and Asia 1% of the assets under management. That expansive geographical diversification of these assets then minimizes extensively on the risk exposures and guarantees a potential, a possibly high return, even in the events where one geographical area the markets go down, we have the other markets compensating for the changes, negative or downward risks exposed by other markets. That is what is guaranteed that consistent high annualized average return. Lastly, but not the least, it's important we also look at the extent of risk mitigation by the fund manager. And by this schedule, the fund manager purpose considers diversification as the main tool of trade to minimize the risk exposures. And on top of that, they are also looking at asset class limits, intraday and overnight limits. We have investment committees, trading models, and a lot of external and internal oversights. Considering that piece of information, you will realize that these MANSA X USD special funds, if you are earning your incomes in dollars, and possibly you want an investment vehicle that will be taking care of your medium term and long term goals owing to the locking in period and the risk categorization, this is a very good investment vehicle to consider. You are also free to do further investigation, further research to form your investment opinion. And with us, we say thank you for watching and see you in the next video.